Okay, so we are still under Module 6, financial statement analysis. So this time we will talk about market ratio and the DuPont system analysis, but we will only be uh, discussing one ratio for each. Okay, now under this market ratio, so this ratio will give us the information related to the measure of the investor's response to owning a company's stock and also the cost of issuing those stocks. So these are concerned with the return of or return on their investment, okay, for the shareholders, and also with the relationship between the return and the value of the investment in the company's share. So that's why for the market ratio, we will only be talking about the book value per share in this case. So this is the most common. Okay, but there are also other ratios under the market ratios. But again, for your or for this module, we for the purpose of this module, we will only be discussing book value per share. So book value per share measures the amount of net assets available to the shareholders of a given type of stock. So here, to solve for the book value, okay, of your share. So your share may be ordinary share or preferred share or other types of shares that the company or the corporation may issue. Okay, so normally if you have the ordinary shares, then there are certain rights and responsibilities, okay, for those shareholders having or owning this type of shares. Whereas for the preference shares, you are preferred in terms of dividends and in terms of liquidity of the corporation. You will be given the first priority, okay, for the among the other or among the shareholders there. So the ordinary shareholders will only receive what is left after giving, okay, the dividend or the liquidation assets to those or for those preferred shareholders. Okay, so for the book value per share, so our formula is total equity divided by shares outstanding. Okay, when we say shares outstanding, uh, we deduct the treasury shares. Okay, if you could still remember from your partnership incorporation, so treasury shares are shares that are being repurchased by the company. These are actually issued shares but are later reacquired by the entity, okay, for purposes, okay, of depending on the purpose, I mean, of the entity, why they uh, repurchase those shares. So but here, uh, outstanding shares are issued and uh, issued to the actual holder or shareholders and not included those shares that are being reacquired by the entity. Okay, please take note of that as well. Okay, so depending on the uh, data, you can also extract the number of shares outstanding from the capital stock, okay, of the entity, okay, coming from the balance sheet account or statement. Okay, so total equity divided by uh, shares outstanding. So basically, this indicates the value of your shares, okay, in terms of uh, the the amount, okay, that is being recorded in the company, okay, based on the historical data that we can get from the financial statements. But um, normally, this can be a basis also for the market share, but this is not the only basis, okay, for setting up the market share of the stock. Okay, this only indicates how much value does the shareholders have, okay, in the corporation. Okay, so that's for the book value per share. Of course, the idea here is that the book value per share should be higher. Okay. So the next types of ratio is from the DuPont system. So normally this system of analysis is based on the proposition that the profitability of a firm depends primarily on the efficient asset management and the effective control of expenses. So thus, this is how the system works or should work. This is actually a variant of our return on assets. So if you could still remember, we discussed this one under the profitability ratio. However, the analysis considers both the impact of the total assets turnover and return on sales ratio. So this is a more expanded form of determining the return on assets, unlike that of the ratio that we have discussed under the profitability ratios. Okay, so here, to solve for the return on assets under the DuPont system, so this is our formula right here. So based on what we have mentioned earlier, so we will consider the asset turnover. Okay, and the other one is return on sales ratio. So that's why our formula is sales divided by total assets, okay, times income after income tax, okay, divided by sales. Okay, so for this module, we will not deal deeply on the DuPont system of analysis. So the purpose is that of this module is that you should have at least a minimum understanding, okay, of the most common financial ratios that is being used, okay, in practice. Okay, for the other ratios, we can have it, or you can have it in much detail, but this should be discussed for other major. Okay, since you are a marketing major, so we just focus more on the most common, okay, financial ratios there is. Okay, so that would be all, okay, under our module 6, financial statements analysis.